Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We're going to start off looking at gold. Now, a couple of things you're going to notice with gold. We've got our weekly and our daily in a negative format, indicating a trend that is down. Only the longer term, the monthly triangle, is green, indicating a longer term positive outlook for gold. But right now, it is negative. We're also below the 50 line in the RSI, another poor sign for gold. But I want to share with you the Fibonacci tool. It's right here. You just click it once like that. You click on the high, recent high, drag it down to the recent lows, which is right here. And you can see we've just come down right to the 124.67. This is a December contract. That's a 61.8% Fibonacci retracement. Now, if this is going to hold, it should hold right around these levels. That's a pullback. So we've had the move up and the pullback. Now, the question, is it going to hold? That's a little too early to say, but one thing I would look at today. So again, we've seen the move up, like right here. We've seen the pullback from the highs down to the support line right here. And the key thing to me was if we were to close, let's say, over the opening range of the day at 1330, it's $1,330. This is the December contract we're looking at right here. Then I think there's a good chance that this is an important low. But for the time being, watch for a rally and also watch the 50 line. If we see this market go over the 50 line, maybe not today, maybe not tomorrow, but the next couple of days, pay particularly attention to that. I think it's going to be a good indicator that we're really starting to move around to the upside. A couple of things that could spark this market off, and they are ifs at this point in time. There's a possible problem with the Deutsche Bank. Germany's coming out about loaning money. They said they don't need it. Janet Yellen came out today, say the banks are well capitalized. That always makes me nervous when you have people coming like that in the marketplace making statements that really are potentially inflammatory. So let's move on to our next market. What we're looking at is crude oil. And as you see with crude oil, it's sort of like just going along the lines here. This is the 50 line right here. Very close to breaking over that line, but look at this action, just kind of like it's just getting tighter and tighter and tighter. One thing you can do is draw a trend line from the highs, these recent highs, just pull this down like this, and it gives you an idea where the market has to go over. And again, we talked about the $46 level. If we get over that level, maybe not today, maybe the next good day or two, it could be an indication that actually crude oil is beginning to base out. We also, as we talked about this, we have, this double bottom, very similar to the gold market, and it's sort of like kind of a store of value right now. But let's watch this market very carefully for a potential reversal. And the market to look at, first of all, it's going to be the daily. If that turns green, then the weekly. If that turns green, then it's go for crude oil. Okay, we're looking at the S&P 500 cash. You can see we are just barely over the 50 line in the RSI. The trade triangles are negative. You've got the monthly, the longer term trend indicating an upward trend. The red weekly trade triangle indicating a negative intermediate term trend, which means neutral on the market. And that's really kind of where we are right now. So let's see how things play out. But generally speaking, it looks to me like the market's beginning to try to make a move back up to the upside. And if we move this out to, let's say, a year or even, you can see the trend is being clearly up, and we've had these sort of negative, these short-term breaks that sort of get people bearish and then it sort of reverses dramatically. But right now we've sort of been in this big sort of flat square box that really hasn't gone anywhere. So let's see how that plays out later on in the month. Pretty much the same picture in the Dow. The Dow really needs to get over. We get over the 50 line, number one. And if we get close in on the Dow, if it were to take out the highs here, I would say around the 18,450 level, I would say that would be a very good sign. So it'd have to go up almost 200 points from where we are today. And I don't think that's going to happen. But generally speaking, it's beginning to try to make that turn. As I say, the RSI has been a little bit a bullish divergence, but it's still too early to call right now. So it looks like a trading range, and the sidelines are the best position to be in right now. Now the NASDAQ, as we said, it's a different kettle of fish. This is in a upward trend. All of our trade triangles are positive, indicating a move to the upside. Strong day yesterday. We are above the 50 line. Unlike the S&P 500 and the Dow, the NASDAQ is in a positive mode, indicating a strong upward trend. So I would expect to see this index move higher. And it's being propelled obviously by Amazon and the likes of other tech companies. So that's all we have for today. Let's be back on Friday. So have a great trading day, everyone, and just keep calm and watch the markets and let them tell you what they want to do.